everyone. It's Mary Piasta here. Welcome to Sonoma Brain Trust. I'm here with my co-host, Chelsie Runnings, a real estate expert, and Daren Blonski, a financial expert. We're here to give you the latest and greatest in all things concerning various professions. So what's going on, guys, in the world?
Well, it seems like it's been a busy week after a lot of quiet in the markets. And Chelsie, we talked last week on real estate, and what's the number? What are the numbers looking like this week? They were killing it last week.
Yeah, so I actually want to show you guys a breakdown for what Sonoma County saw in the last month. So I'm going to share my screens with you. Can you all see that?
Yeah, that's great. Wow, look at those numbers.
Look at those numbers. So can you guys, I mean, if you look over in this right-hand gray, look at, this is how much the prices have jumped. Roanoke Park's the only one that didn't see an increase in pricing, but those are large numbers, you guys. 30% price increases. And then if you look over here in our months of inventory, I keep saying there's a lack of inventory, and look, like right here in Petaluma, last year in June, we had 1.7 months of inventory. Now we only have 0.8 months. So wow. I've been saying that the buyers are out there taking advantage of these low interest rates, and these numbers just prove it. Look at, I mean, you guys, look at this right here. Glen Ellen saw a 300% increase in sales.
Whoa.
That's insane, which, I mean,
mind you, that was only 3 homes sold, but it's still insane.
No, that was only 3 homes last year, 12 homes this year.
Okay.
Well, and it's such a small community anyway. So
right.
That's a lot for that area.
What's interesting is that volume on Sonoma. We're up there right next to Petaluma, and the number of homes is far less in the Sonoma area than Petaluma.
Yeah, I think, you know what I think it really comes down to is we have those, you know, San Francisco, San Jose, Santa Clara people moving into these less densely populated areas, but perhaps like Petaluma is easier to jump onto the freeway to get to the office when they do actually need to go to the office, right? Whereas Sonoma, you kind of do back roads and whatnot. So,
well, and you got to contest with Highway 37, which is,
yeah, like that's, don't even get me started on
like
Highway 37.
Put a needle in my eye kind of commute.
Yeah. So, and before I get into that, you shared something, Daren, about some rental statistics that I just find so interesting, because we have these massive boosts in real estate sales, but I'm just going to read you something. 32% of households reported missing their housing payment in the first week of July, and that's rents. So 32% of people missed their July rents, right? But then we have these huge numbers of people out there buying houses. So I don't know what that means. Really, I just find
it means that people aren't paying their rents. They're gambling in the stock market.
Maybe, because you said the stock market was crazy. I mean, you said you saw a crazy number of things happening yesterday, right?
Yeah, I mean, well, there's a lot going on, but I mean, basically, there's a lot of kind of veterans out there that feel like when we went through the shutdown and then everyone got their stimulus check, that a lot of people plowed that money into the .coms, and that created a lot of volume in areas that didn't typically see that kind of volume or that kind of recovery. And some are beginning, and not some, quite a few are beginning to ask the question, is there a bubble here? And speculating there's a bubble here. And we certainly saw some of that blood in the street start, or a sign of things that could come. Will they come? I don't know. I'm not convinced that the federal government isn't just going to back everything at this point. I think in a matter of time, they'll be buying stocks. And I think that I could get into the whole boring macroeconomic theory of that. Every Tuesday, my partner and I talk macroeconomics for an hour. So if you're interested, you could reach out to me and join that. But I'll save you to the pain of that one. Do you guys want me to dive into the market a little bit for a minute?
Yeah, I think that would be really helpful.
So, as a general rule, right? So what you're looking at in front of you is the S&P 500. This is what we look as that kind of barometer for, the overall market. It's just a sliver, right? You can cut the market and cut the pie in many different ways. And this is looking at the biggest 500 US based stocks. Well, yesterday we broke out. So we had a high right back here in June. Around June 5th, this whole week, we kind of traded up above that 319 level on the S&P. And we've been really working up against that resistance. And you can see that from last week's trade. We were just all along just hammering right below that 319, lots of resistance. When you get lots of resistance and the market can't get above it in market New York hour time frame, it jumps above it. That's called a gap. And you saw that gap coming in Monday. And so we were off to the races. We saw a huge gap up. That was our close Friday right there on that candlestick. And then it gapped up above that 319. You can see there, did an early sort of test. We won't call that a full test. Came down hard and then tested it. But right as soon as it finished that test at 319, Governor Newsom goes, hey, we're shutting it down. Only news source I could find other than some tensions with China. That's why I always tell people you got to trade the chart. You got to watch the chart before you look at the news, because the news will lead you astray. And the market just took a serrated knife on people right there. And you can see it just dropped. And then this morning we dropped a little bit down and we found this support here around 312. And we've been working back up since then and pretty consistently. We'll see. We're now coming in the 12 o'clock hour. Anything goes at 12 o'clock is kind of the rule of thumb in the trading world. We have a saying that the dumb money trades in the beginning of the day and the smart money trades at the end of the day. So it's always really important to see what happens at the end of the day. But if that felt really severe, but if we step back and really look at this in context, you can see that we're pretty much just trading in a channel. And you can see the upper end of that channel is where we were yesterday. And there's more or less your channel, right? That we've been trading in now since the early June. Market really hasn't gone anywhere. Now you flip on over to the Qs, which is the tech stocks, and you get a different sort of story, right? You can see just this movement, consistent movement upwards, and you're hearing that a lot when you hear about in the news. Everybody's talking about Tesla, and Tesla shot the moon this week. It went up to 1,800 a share. And it just gapped up hugely yesterday and then dumped down in a big way. And now it's doing what's called a consolidation. So you can see that wedge pattern happening right there. That's a wedge. And so the price is just winding up. And as it winds up, you're going to see it break one way or the other. And then those breaks are big moves. So traders are sitting on either side of that, waiting and based upon how they feel. So, but I think, and the reason I bring Tesla up is because I think the broader story behind Tesla is so important to pay attention to, right? It's really, I would think, a metaphor for the times. And I think it's a metaphor for the millennial generation, for some of the younger Xers, and what we're really seeing, right? You look at Tesla, who's trying to do good by getting automobiles off the street that are pollution driven. But it's also this idea of innovating. If you look at Elon Musk and his history, and he's controversial. He basically has given all of the major institutions, including all the politicians, the middle finger. It's the first time in history that Tesla, being one of the 10th largest companies, that there's been a 10th largest company and not been a part of the S&P 500. And he's basically saying, look, you big institutions, you're full of it. And I think that's part behind it, and such the millennial, it's kind of the cool class generation. And speaking back to Chelsie and your real estate, I've heard over and over again of, all these Teslas driving up to buy real estate in Sonoma Valley. And I mean, that's kind of the metaphor right now, what's going on. And it's the millennial generation wanting the economy to do good, but all not at the cost of the environment, right? And so I think it holds a larger story, but very interesting. Some of the top analysts on the street are calling for 2,000 plus, 3,000 plus, 4,000 plus on this stock. So look out for that breakout. But right now we're looking at what we call a descending wedge in the market. And so when this when this puppy breaks, you're going to see a break one way or the other in a hard direction. So that's all I really wanted to cover today. You've certainly had a lot of news coming out. Bottom line, the market really hasn't gone anywhere other than stay in this channel. And any time it gets out of that channel, it goes right back in really quick. And that's what happened yesterday. It's all going to be contingent, I think. And the biggest thing we got to watch is the unemployment numbers and whether or not the unemployment continues to get the UBI number, which is that 600 extra per week. And we're going to see that. If that gets re-upped at the end of this month, that's big. If it doesn't, it's not so good. Market thinks it will right now. And as long as the market thinks that the Fed has its bazooka to its back, it's going to keep on just staying there. If we get a bleed out in the market, something to be watching is this 308 number and change right in here. But this really 303 on the SPY, there's a big line in the sand there. We break 303 on that, and you're going to see a bull battle bear. People will be fighting it out. So that's the markets from and what I got today. But all in all, we just haven't gone gone very far from a broad perspective, but there's certainly episodically within the markets, the tech namely has done a lot.
So I guess the message of the day is we're just going to wait and see and watch and see what happens in the future here, huh, guys?
It's the name of the game always, right? One thing I thought I'd bring up to you, Mary, I thought was pretty interesting. I was watching some headlines yesterday and the JCPenney's bankruptcies going forward. Mm-hmm. And there were a lot of small investors off Robinhood that bought the stock when it was going bankrupt, like, oh, the government will bail this one out. And now they're begging the judge for mercy because on the capital structure, the common stock holders are the lowest or one of the lowest to get paid back. And I just think that's indicative of kind of the dice rolling that's happened over the last 5 months in the market.
Oh, yeah. I mean, there's all sorts of ways people are trying to get around bankruptcy right now from an investor point of view. So that's something we can absolutely address in another time. But for today, we want to thank you all for watching and remind you to subscribe, share, and like our videos if you find them interesting, and tune back next week for more updates.
Thanks, everybody, for your time. Be safe out there.
Thanks, guys.